Right, the last stock market update of 2022. Let's make it count. How was the week that was? Well, these are the valuations based on price earnings ratios. Again, only energy stocks and the financials which really stand out as being relatively cheap. This means their share price relative to their profitability. Now, you might think energy profitability is going to dip. You may well be right. But anyway, energy and the diversified banks continue standing out. How was performance for the week? Well, energy and financials did indeed go up, but so did a lot of other companies, which you may feel is unjustified given that they look overvalued. What about other measures of valuation? Well, the price earnings growth ratio is one of them. I'll just move myself out of the way of Apple and Microsoft. Price earnings growth is a measure of the share price relative to the growth of profits. And you want the number to be below 1 for it to be undervalued. Well, energy stands out here and not much else. I know you've got your eyes on Tesla, but watch out for the volatility on that one. Well, fine. What about the S&P 500 and how do things look there? Well, this is where we are. And as you can see, so far this year, every time this resistance was hit, the market fell. And every time the support was hit, it bounced up. And presumably it's going to do this. It may not, of course. But as things stand, I remain risk averse. Let's see what happens when we analyze things again in January. But certainly at the moment, I remain somewhat risk averse. And Apple is a good example of why. Those supports have not held. They held for a long time since September 2020. And Apple's not the only one. A lot of the companies have gone in this direction. It's not held. It's fallen through. And whilst it might recover and go back up, which would give a 23% return, I think more likely, I'm afraid, is a 35% decline. Nothing wrong with the company. It's just the way things are moving. Microsoft, again, in that downward channel, and it's reached up to here. It's going here at the moment. Chances are we're going to drift a little bit lower. Certainly not looking at buying more at the moment, but I will reevaluate as I do every single week. And that's why I do a weekly evaluation for you. If you look at nothing else, just watch these weekly stock market updates of mine. Amazon is over here. And again, classic example of a company which fell below that support. We didn't know it was going to. It did, though. And when it fell, and Apple may go this way, it's fallen some 54% since then. Now, were it to recover back up and go up there, well, it'd be a 50% return in a year. I'm not saying it's going to do that yet, and I'm still waiting to change my mind on Amazon and buy some more. There will come a time. I still hold it, and there will come a time I may well buy some more. I'm risk averse. I don't make the decisions I don't need to make ahead of time. So I don't need to make the decision to buy some more today, given I'm risk averse. So I'll give it another week, see what happens. This is Meta Platforms. Again, you can see that massive decline this year, 77%. But it is somewhere going along there. Let's see if it can continue doing it. We'll see. If it were to, you'll get a big return. Most people wouldn't expect that. That's where we are on it. Again, we'll keep an eye on it, but not something where I'm thinking, oh, I think I'll buy some. Costco has fallen, I'm afraid, also below that support, but it's done it in the past, and it can do, and it can recover back. So let's see what happens. If you're risk averse, you'll get out, take your money and leave it. If you're more risk neutral, you'll wait, knowing that it may well go sideways for a bit before resuming that upward trend. Okay, PayPal. Well, this is a good lesson, isn't it? That dropped some 77%. I mean, what the hell? The market's really rubbish at valuing things that it gets it that wrong. 77%, then rebounded up, fell back again. And, you know, Meta might do this. That's why I'm saying I don't want to be too early into something like buying into more Meta. 42% would be the return if it stayed along that line. But now it's back to those lows it's not seen forever. So the decision on whether to buy more, not this week, thank you very much. Come again. Johnson & Johnson, I mentioned this just because it's in the news a lot amongst various pension funds, institutions and the like. Bull, base, bear case. Okay, simple. I've drawn it out for you. You can see it yourself. I'll zoom in. Bull, base, bear. You pays your money, you takes your choice. Which one of those is going to work out? Well, if it did go to the top line within the next 12 months, then take your profits and run. Okay? It's as simple as that. But most people won't go into it. I'm not looking to buy Johnson & Johnson. Katerra, the energy stocks, as you've seen, they've fallen off a bit of a cliff. If you're still holding on to them and you're risk averse, you would get out. You would get out because the momentum here is showing downward trends, and it's fallen below the support. So you take your profits, you run. Thank you very much. Halliburton, however, remains in that upward channel, and therefore you'd still look for those gains. Okay, it's still on track. Can you see? You might even print this out and say, well, that's where it's the track it's got to be on, and it's still on that track. Marathon Oil, similarly on track. Occidental, I still own. It's testing my patience, though. Warren Buffett owns it as well. It's at that support. Let's hope it doesn't fall below it. And the 23% return is the gain we should be looking at from that. But you can see there's some worrying signs that it's overbought and may fall below. If it does dip below that, then hey-ho, we'll take the profits and run. Devon Energy, like Katera, has fallen below there. Now, it might just continue going up. It's just these things worry me. If you're risk averse, you take your profits and run. If you're risk neutral to risk loving, you just hold on to it a bit longer because it hasn't definitively started a new trend. It might just be going along there. So we'll wait and see. Marathon Petroleum, yeah, that's fine. No issues with that. It's still doing the right thing. There you go. And the 60% return is what we're looking for on that one. Adobe's there because, like I said, every week, it's just a lesson in a company which is doing well. How might a recovery look? So it's not for purchasing or not. It's just to have a look at it. And you can see it's the stochastics, which tend to be a bit premature, or started peaking upwards. The monthly MACD has, so is the price. Well, we'll see if it goes that way or continues higher. But it's more purely for education. I have that one. Eli Lilly, also in the news, particularly amongst the risk-averse hedge funds and pension funds. And you can see it's on track to deliver our 40% returns, which is what we're looking for, even though it's a little bit overbought. So you've got to be a bit cautious on that one. Don't need to discuss that. I made loads of money on it. Thank you very much. United Health Group Incorporated. It's at that bottom line. Let's hope it doesn't do an apple and crack below it. But if it doesn't and stays within those lines, then we're looking at, again, probably a 60% return on United Health Group, which I own. And have a look at my campaign for $1 million. Lots of free resources, tools, as part of my campaign to teach 1 million people how to be better investors. Thank you all very much. Make sure you watch this every single week. If you read or watch nothing else of mine, like, subscribe, follow, links in the bio, the usual gumph. Thank you very much.